Our next keynote speaker is someone who, if you've been following the online lending space, needs no introduction. I think he's probably done more over the last 10, 11 years than anybody else in this room to drive innovation in online lending. He has also got the distinction of being the only person who has given a keynote at every at all the 3 Lendit events: USA, China, and Europe. Many of you have seen the news overnight that came out that he has, he's got a wonderful new innovation that he's going to be sharing with us here this morning. So without any further ado, please join me in welcoming the CEO and co-founder of Upgrade, Renaud Laplanche.
Good morning. Thank you, Peter. It's great to be here. All right, so today is a very special day for me and for Upgrade. We are announcing a new product that I'm truly excited about, which has the potential of making credit more affordable and maybe more importantly, delivers of peace of mind to millions of people around the country. But before we go into the new product announcement, I'd like to take a step back and talk about the broader goal we are trying to achieve, and really the process that went into building that product. So Upgrade launched in April 2017, so almost exactly a year ago, and our goal from day one really wasn't just to make loans. We had a broader goal of inviting our users into an ongoing relationship that would empower them to learn about their credit, to take charge of their finances, to make good credit decisions, and eventually lower the cost of their credit and build the future that they want. And so there are many ways we can achieve these goals, and one of them is by implementing a series of processes and principles that I will describe in a minute that we call Online Lending 2.0. So we are off to a good start. About a year after launch, we are now on a run rate of making about $100 million in loans every month, all purchased by institutional investors, and we're growing rapidly. We have about 250 team members spread out over 3 offices. We're headquartered here in San Francisco, just a few blocks away. Our operations center is based in Phoenix, Arizona, where we have access to a very deep talent pool of loan servicing professionals and a much lower cost operation than we would have here in San Francisco. And a engineering center in Montreal, which was really the only place in Canada where I could be speaking French, and also has great engineers. So Online Lending 2.0 is really something which we meant to encapsulate a lot of the learnings of the last 10 or 12 years, not only for myself or for the Upgrade team, but really for the industry. And I think there's a lot of sort of convergence in the ways of investors, partners, customers give us feedback, and the way other CEOs, other peers in the industry are working towards sort of taking advantage of the learnings of the last 10 years and building better platforms. And we all have a different flavor of Online Lending 2.0, but I think the general direction is pretty industry-wide. And it all starts with the customers, with the borrowers, and trying to attract the right borrowers, the most responsible borrowers, and really set them up for success. So we've developed a series of credit monitoring, credit alert, and credit education features that we make available for free to our customers, and that we really believe will sort of help them make good credit decisions and perform better. A second building block of Online Lending 2.0 is a very modern technology stack that's really based on microservices that can be sort of deployed independently and can be rearranged in a way that makes it easier to quickly develop and test new products. And we'll talk more about that in a minute. So I believe this combination of credit health and multi-product relationship really helps deliver more value to borrowers and a better experience. But it also helps on the other side of the marketplace, the other side of the platform for the loan buyers, because we believe that there's positive selection, that the type of borrowers who are responsive to the credit health message will be the type that are sort of interested in learning about their credit and remaining current on their loans. And that the credit health features also will help shape a good credit behavior, encourage our customers to make good credit decisions and eventually perform better. I also believe the sort of multi-product relationship gives just another incentive to stay current on the loan with the promise of potentially accessing new products if you perform on your first loan. So all this should be accretive to investor performance. The other sort of building blocks that should be accretive to investor performance are cash flow underwriting. So it's our way of estimating the sort of ability to repay for consumers by taking a look at expenses other than the payment of the debt that gets captured in the debt-to-income ratio. So we're focusing, in addition to credit attributes and DTI and income and employment, we're also focusing on cost of living expenses and taxes and rent payments, and all these expenses that aren't generally taken into account but are really important to assess the ability to repay. We've also invested a lot in the sort of servicing operations in Phoenix, and we believe I've put in place sort of unique loan modification strategies, settlement strategies that are sort of used depending on the specific situation of the borrowers, are designed to avoid sort of necessarily pushing a borrower into a default situation, but rather working with them and increasing recovery on delinquent loans. So all this should help investor returns. The other areas where we've innovated is in terms of investor product and structure. So one of these new structures is the pass-through security that really turns loans into securities while preserving the economics of the loan. So avoiding the sort of time and risk tranching of traditional securitizations. So that type of pass-through securities is becoming very popular in the industry, and because it can be sort of tracked, it's a QSIP securities, can be tracked on Bloomberg, it's a standardized documentation, it also can sort of broaden the scope of potential loan buyers and deliver more liquidity. The sixth building block of online lending 2.0 is really increased transparency. So in addition to loan level data, I think we've pushed the envelope in terms of data made available to investors, and we are now making the entire credit policy available, so it's not a black box. Investors can replicate the credit policy and even sort of test that credit policy on other data pools that they might have. There's also sort of full transparency into verification procedures and ongoing transparency with a monitoring pool done on the portfolio that gets also shared with investors. And the last area is in terms of compliance and data integrity, where with implementing sort of new technology, more automation that is helpful to compliance, and also benefit from the latest available technology in terms of data integrity by using the blockchain protocol as a way to create a time-stamped, immutable record of every transaction. So one of these key building blocks, as I said, is really sort of starting with the customer and trying to sort of deliver the best possible experience and shape a good behavior. So I can't demo the entire credit health suite of products. Just wanted to show you a quick preview of what the product does. So you can obviously sort of get your credit score, get updates, look at factors that hurt or help your credit score. There's a lot of data and unique content, both text and video content. But I think the most sort of interesting part of the product is what we call a credit score simulator that really simulates the impact of financial decisions you might be making on your credit score. And it's sometimes pretty counterintuitive and sort of good to know before you make that decision. So let's take a look at the credit simulator. And so basically, let's take a use case where you need $20,000 in additional credit. There are two ways to get that. It's either by asking for a sort of increase of $20,000 on one of your credit line, or getting a new credit line for $20,000. So one option would increase your credit score, the other would decrease your credit score. Not necessarily intuitive, good to know. Probably not a big deal if your score is 810, like in this example. But if you're borderline and you're in the 680, 690, a 10-point swing in your credit score might make the difference between getting approved or getting declined for a mortgage. So have a pretty big impact on your life. So I think credit health is really helpful as a standalone product. It really becomes very powerful in combination with personal loans. And so the main or the first sort of interaction with Upgrade is often a loan application. So when you apply for a loan, there are two possible outcomes. Unfortunately, one of them is you get declined. But if you do get declined, then our goal is instead of just serving an adverse action notice that's really not very granular and very actionable, we're trying to provide the very reason why you got declined and how to fix it. And so increasingly, we'll make available action plans to users. And when they follow the action plans and we start getting trending data and we see the trends improving and there's more data becoming available, it becomes easier and easier for users to know when they become eligible, know when to reapply, and the application process gets a lot easier. It's also easier for us to make an approval decision at that time based on improving trend as opposed to just point-in-time data. But then once you're approved, that's really not the end of the learning process. It's actually a positive encouragement to keep learning. And at that point, you can sort of keep monitoring the improvement and stay focused on your credit score, on your credit standing, and really set goals. And as you fulfill these goals, you get rewarded with better loan terms. And the better loan terms help you sort of pay back faster and get sort of better chance of getting approved for the next product. So there's really a lot of data synergies by having sort of both credit health and loans under one roof. All right, so now moving on into the new product. So we thought it'd be fun and interesting to put our new product in the context of other financial innovation in consumer credit products. So going back about 100 years, that's where you can trace back the origins of the personal loan product with Household Finance Corporation that in 1905 made that sort of what was a really sort of very good, responsible consumer product available for families to sort of borrow money for and finance a one-time large expense and pay it back with a decent interest rate, a fixed interest rate, paid back over 2, 3, or 5 years. And that product became very popular until credit cards came around. And credit cards in the 1950s were initially payment mechanisms, not necessarily credit mechanisms. It all started with Frank McNamara, the founder of Diners Club, going to a restaurant in New York City and famously forgetting his wallet, having to ask someone to pay the bill on his behalf. And that embarrassing experience gave him the inspiration, or so the story goes, to create that card that would be accepted throughout restaurants in New York City, and that would become the Diners Club card. So it all started that way. And then sort of, evolved over time. But the next consumer innovation I really like was the ATM, or the cash machine, that appeared in 1967 in London, in sort of Enfield, North London, that really for the first time let consumers access their bank account outside of banking hours. Great invention. And then you probably need to wait another 30 years to see then a slew of innovations that really came from the fintech revolution, that really started with PayPal and with a number of companies that enabled mobile and online payments, online lending, credit monitoring and credit education, digital asset management, and online sort of stock trading and digital currency trading, if you're into that. So that's financial innovation in general, but let's now zoom in on sort of credit product innovation. And so we can remove from this list anybody who's not sort of making loans, and really, we lose the ATM too. And you're left with online lenders that really sort of give better access to existing products, to installment loans or credit cards. So what we did was creating a sort of better, cheaper, and more convenient way to get sort of either installment loans or revolving credit, but really didn't create a sort of new credit product. So you're really left with these two products that have been around for more than a century and half a century, installment loans and credit cards. And one of these two products, the credit card, has evolved over time. And so it became more shiny, more gold, more black. It came with miles, cashback, other rewards, basically other reasons to use the card, to the point today where you have hundreds of millions of cards in the country, about 2.7 cards per adult, with a total of over $1 trillion in outstanding balances. So that wouldn't be an issue if credit cards were good consumer credit product, responsible consumer credit products. Unfortunately, they're not. Credit cards are very high cost, and most of those costs are hidden. It's not just the high interest rate and the high fees. It's also a very carefully crafted feature that's called the minimum monthly payment. So I don't know if you've ever spent any time looking at the true cost of a credit card if you actually make the monthly minimum payment. But let's go through a simulation just for a second. So let's say you have a $10,000 balance on your credit card. Your interest rate is, well, let's go to cardrates.com. Let's say you have excellent credit, and so our interest rate is 16.9%. So it's not a high rate. It's pretty average for someone with really good credit. Let's say the minimum monthly payment is interest rate plus 1%, which is how most cards are structured. So in that case, it would take you 289 months if you make the monthly minimum payment to pay it back. So that's 24 years. And by the time you're done, you'll have paid $13,000 in interest. So you'll have paid back 2.3 times what you initially borrowed. So that's not great, but now let's assume that you're not so lucky and your credit score is not excellent, and let's say you have a fair credit. It's not bad, it's fair. In that case, the interest rate would be 21.45%, and let's say you have one of these credit cards that requires only a 2% monthly minimum payment, and many of these cards are out there. In that case, it will take you 1,105 months, so that's 92 years to pay back the balance. And by the time you're done, you'll have paid $75,000 in interest. 92 years, your credit card balance will outlive you. So I mean, you get the point. Credit cards aren't great consumer products. But it doesn't have to be that way. I think there's hope. So let's imagine a better product. So what if you had a product that gives you a credit line the same way a credit card does, and you can use it at any time, but you only pay the interest on the amount of credit you need and you use, as in a credit card, and there's no fee to open the line and no fee to use the line. But then at the end of the month, that balance would turn into an installment loan with a fixed rate. So you won't be subject to rate increase that we know are coming this year, and you can lock in a fixed interest rate. And then you pay it back over 12, 24, 36, 60 months. You choose the term, and you have the certainty and the peace of mind of getting completely out of debt within a reasonable time frame. Wouldn't that be an amazing product? Yes, yes, it would. Okay, you saw it coming. We have it. This is the Upgrade personal credit line. You can now go on our website, upgrade.com, choose personal credit line, and we'll be rolling out the product to our customers over the next few weeks. And you can already sign up for the waiting list and receive an invitation shortly. So I think what that product does is really combining the benefits of personal loans and credit cards, where you get for each advance, you get the fixed rate, the fixed monthly payment, the predictability, the low cost, and the peace of mind of an installment loan, but you also get the flexibility and the convenience of a credit card. So the way it works is very simple. Let's say personal loans are a great product if you have a one-time expense. Credit lines are a great product if you're going to sort of have multiple expenses over some period of time. So let's say you're moving, you need $500 to rent a moving truck. You sort of request an advance for $500. You choose your term and your interest rate, and the funds get deposited into your bank account. Then the next month, you're furnishing the place, so it's going to cost you $4,000 in furniture. You're requesting another $4,000 on your line. It's a larger amount, so you might want to spread the payments out over a little bit more time, let's say 36 months, and that gets deposited into your bank account. So very simple product, very easy to use, but very transparent and responsible and consumer friendly. And the good news about that product is it's also attractive on the other side of the platform for investors. So where investors get the monthly sort of cash flow and the predictable monthly cash flow that they get with a personal loan, but also the ongoing risk management of a credit card, where we can dial up or down the sort of amount of credit available and the interest rate based on risk, and presumably benefit from a higher payment priority as the borrower would have the promise of accessing more credit as they stay current on the line. So I'd like to conclude with a thought on the process of innovation and the opportunities available to our industry. I think what we've done with personal credit line is really building a radically different and better consumer product using product features that had been available from credit cards and installment loans for many decades, similar, but that had never been sort of assembled in that particular way before. So similar in that way to the Wright brothers building the first airplane out of bicycle parts. So I don't know if personal credit line is an airplane just yet. I think it is. But I think there's a tremendous opportunity for our industry to use existing technology to create radically different experience that provides unique consumer value. So let's do more of that. Let's build more airplanes. Thank you.